Welcome to Market Week in Review for the week ending March 1st, 2024. I'm Sophie Antal-Gilbert, and I'm joined today by my friend and colleague, Shay Shatria, Director of Investment Strategies. Hello, Shay. It's wonderful to see you. How are you?
I'm good. How are you, Sophie?
I am very good, thank you. So I am looking forward to getting your insights on two topics that are making headlines this week. The first one is inflation, which honestly has been in the headlines for a long time, but would love your take on an update there. And then second is what sounds like we are averting a government shutdown at the moment in the US, and would love to get your perspective on that. Sound good?
Sounds good.
All right, well, let's start with inflation. It's been top of mind for everybody for so long. We just got some new information. What are the insights? Is it up? Is it down? How should investors be thinking about inflation right now? And what is the impact maybe for Fed policy going to be?
Yeah, for sure, Sophie. So we did get the Fed's preferred inflation gauge, actually the Core Personal Consumption Expenditures Price Index, or the Core PCE as it's more commonly referred to. So for January, the Core PCE measure increased 0.4% on a month-over-month basis and 2.8% on a year-over-year basis. Now, the good news is that both of those numbers actually match the consensus estimates. Now, there's a slight wrinkle to the story where if you take the monthly change of 0.4%, that was actually double the rate in December. And what the upside in January did was it actually pulled up the shorter term momentum gauge, if you will, the 6-month annualized inflation number to back above 2%. It has actually been below 2% in December, and it re-accelerated. That 6-month annualized number re-accelerated to 2.5%. So, of course, 2.5 is above the Fed's 2% inflation target. So, some good news and maybe some, not necessarily bad news, but just more of a watch point. But the way we're thinking about the PCE is that January was perhaps a bit of a slight setback, but otherwise it's been a generally favorable news story around inflation. We've seen considerable amount of disinflation take place, so we still think it's a positive story. Maybe 1 month doesn't necessarily change the broader scope of things. Now, I guess the bigger question is, what does this mean for the Fed? And as I said, month-to-month data can be volatile, so the Fed will be patient. And actually, to that end, we did have New York Fed President, I should say, John Williams, making similar comments this week, where he did say that restoring price stability will require some patience because things can be volatile. But if all goes according to plan, he did indicate that the 3 rate cuts that the Fed had priced in or indicated in their dot plots still made sense to him. And I think overall, that directional trend is what the markets are roughly pricing in. The markets do have the Fed easing sometime at around mid-year, which overall kind of makes sense to us as well. So long as things continue to progress as expected on the inflation, as well as on the employment side of things.
Okay. Well, it sounds, we're always good takers of good news. So that sounds good. It sounds like we have another good news item, which is that it sounds like we're averting a government shutdown at the moment, at least as we're recording this right now. How is that truly good news? How should we be thinking about it? If I have my investor hat on, how should I be thinking about that as an investor? And do I need to be thinking about it?
Interesting question. It's a bit of a nuanced answer, but this is clearly the U.S. government is another classic, can kicking, if you will, where the House did agree on another, once again, stopgap spending bill or temporary spending bill, which will extend the deadlines. And things do get a little bit more nuanced because there were a couple of different deadlines. One that was closer and one a week apart, but the more consequential deadline has been shifted back to March 22nd. So it does give Congress a little bit of leeway now to finalize their plan. And some of the reporting that I've read indicates that Congress is potentially close, but just needs to iron out some of the details. And hopefully the few weeks that they'll have here will help them to flush out some of those differences. Now, one thing just worth noting, Sophie, is that we are reporting this ahead of the vote in the Senate, which is expected to go through, and then eventually that bill would, of course, reach the president's desk and will have, the extension, if you will. So yes, the good news is that the government shutdown has been averted for the time being, but we still need to finalize. Congress still needs to work on the finalized plan. Now, I think for investors, perhaps the more interesting thing is that this isn't anything new, right? Congress hasn't met its budget deadline since the late 1990s. And what's interesting is I've read that on average, Congress has actually relied upon 5 stopgap spending bills before an agreement was ultimately reached. So clearly, these temporary measures isn't anything new. It's sort of par for the course these days. And moreover, as it relates to the shutdowns, clearly for the time being, we have averted one. But even here, a shutdown isn't anything new. In fact, since 1990, it has occurred 6 times. And from a market perspective, the duration of those shutdowns, some were a little bit shorter, some were a little bit longer. But the market returns have generally been positive. Again, a little bit, in some of those instances, maybe a little bit less, some of them a little bit more positive. But the bottom line is what the markets tend to do is look through, these uncertainties as it relates to government shutdowns and what have you, because any lost output as a result of a shutdown is subsequently recouped in the next months, right? So it is something that the markets tend to look through. So the advice for investors, I guess, is to just stick to your discipline and stick to your investment plan, because that's really what ultimately will determine achieving your long-term investment objectives.
Thank you so much, Shay. Unfortunately, that's all we have time for today, but thank you so much for your insights. And thank you for joining us. We'll be back again soon.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.